Alright, so we are back with another trade recap today. And I'm just going to be recapping over essentially Asia session from July 19th on the Friday. Right? I'm recording this video a little bit late. It's not the 19th today, it's the 20th today for me, but I'll be recapping Asia session. You guys know I typically just trade New York session, and maybe 20% of the time I trade Asia session. The reason why I avoid Asia session is typically it doesn't have the best setups for me, but sometimes when it does, I will take the trades and execute, right? Because our goal is always to grow our accounts, whether that's a personal, whether that's funded accounts, try to get a payout. There's many reasons as to why you still want trade frequency of some type. Right, so this is essentially Asia session for me, okay? And then also I'll be recapping a little bit of London session on the same exact day, on the 19th of July. This is actually the 18th of July technically, and this was the 19th, midnight. I also basically stayed up this whole entire 7 hours. I basically just stayed up and decided to just stay up for the night. I'm going to sleep pretty late this day, honestly, I'm not going to lie. Usually don't go to sleep this late. But I felt like I might as well trade because there's nothing too much for me to do. Kind of bored. And you know, it's cool. It's cool making money when you're bored. It is. Just never tilt. Make sure emotions are in check, and you should be good. But anyway, let's go over trades and what I was seeing. So for this day on Asia session, what I was seeing is obviously we can see if you want to use a swing structure tool to market a swing structure. Technically, this is all swing structure here, right? This is a breaking structure here, right? But because when we make a huge leg like this, especially one that's even bigger previously, price is likely to create a lot of minor structure, causing a pullback, right? And we can trade this minor structure as long as it gives us enough wiggle room and space to put our entry, stop loss, and TP. And in this case, we did have a solid amount of space, not a lot of space, but we do. This model right here is literally the QM model that I teach you guys in the course. If you guys want, you can refer back to that. But essentially what it is one huge big downside move. Externally on gold, we are bearish as well, okay? Keep that in mind. And then essentially what we do is we fail to take out the low, right? And we start creating microstructure or internal structure to the upside, coming back to and flip an origin, and then we come back down to take out this weak low right here that's external. So keep in mind, this is internal break. These are internal breaks of structure. This is an external break of structure. So keep in mind how time frames and fractal nature of the market works. It's extremely important so you don't get caught up trying to long these demand zones down here essentially after we already changed market structure, right? So market structure to me nowadays is literally the same thing basically as my draw liquidity, because that is where I'm anticipating price to go to, and that is where I can use my personal experience seeing this play out all the time as my foundation for my edge, right? Because the entry, anyone can do the entry. The entry models are very mechanical, I would say. Like almost 100, basically they're 100% mechanical, right? You guys know my impulse model, candle break, 1 minute candle break, impulse model. You guys know fair value gap, OB entries. You guys can identify that's very mechanical on the 1 minute as well. And then there's also the inverse fair value gap model as well. And then of course, last but not least, if you have a change in structure, and then you can enter off some fair value gap or OB as well. That's the last one. But combining reactions of the market in anticipation, we can create an even stronger edge, meaning an even higher win rate than before. That's essentially all it is, right? So right here, we had an internal change of character. I could probably change this. Also, you don't have to name it internal. You can, because technically, I'll show you guys something real quick. You just want to name it to something that makes sense to your brain. To me, it makes sense to put these as my current external, because this is tradable external. This is tradable internal structure. So I would consider it as my external for my entries. It's kind of hard to explain. I'm not going to lie. This comes from experience. It's just something that I can't really find a way to define yet. It's just it all depends on the size of the range, and this is a good range. I know how much typically gold moves, and this is a very good. This is a very good training condition for us to trade this pullback phase or mitigation phase before the expansion down. So that's what I was seeing here. So I made a change of character, right? This was the last high that broke structure here, making that low. We broke above it. This is very weak. Remember I teach you guys wicks are not that strong. So if you hold it all over here, this would be where you can confirm it with the body closure above. We came back, tapped into a fair value gap. We did not tap into the origin. Why? Because price does not always have to mitigate everything, right? Price in this case missed the origin on purpose. Why? Because later on we're going to take out those buyers that have a limit order set at the origin, and they're essentially just going to get wiped out as liquidity, right? So if you had a limit order here, try to target something thinking we're still in our mitigation phase when we already expanded, well, you're clearly wrong and you get taken out the market. So that's why price left this origin here. That's why I marked it ahead of time as well. It's origin right here. I was eyeing that. And then basically what happened here was I didn't see this or recognize this at first as a very strong change in character. So I took a loss here, right here, off this origin right here. I had a limit order here, and the reason why is because of how structure was already in my favor here, right? Structure on an even smaller internal scale, factually, was already in my favor. So this was just a retracement to me to continue lower, but I failed to recognize this was indeed a confirmed strong change in character. So then that's when I flipped my bias here. I didn't take a full 1 hour loss here. I just marked as a 1 hour loss, but essentially what I did was I basically broke even very fast here. I just cut the trade very fast, short, maybe for a little profit, but I just put 1 hour here just because worst case scenario. And since I don't want to put like 0.2 RR win, I'll just put it in as -1 R because this is a bad trade. This is a bad trade idea right here. Okay, this is a loss that I would say is invalid because of this change in character here. So I punished myself and put this as a -1 R in my journal. And then basically right here, what I saw was, since I saw and I noticed price is not taking out this low here when I enter this short. It should, but instead we reversed very strongly. And what I did here was closed out my first initial short position. This is something I don't recommend you guys doing, by the way. This is only if you have a lot of experience, okay, being trading like this. Then you can make these discretional decisions to close out early. I would highly recommend, even majority times, I don't do this. This is just a very rare one of those situations where I start noticing that we are actually creating a QM model that I teach you guys, right? We're actually creating a QM model before we continue dumping. So that's what I noticed here. And that's why I changed my bias. I took an inverse fair value gap entry basically after this body closure. So I closed out my short, immediately went in long, stop loss below this low right here. And then I targeted the weak high right here. Why is this a weak high? Well, because if this is true change in character, we obviously held demand here. This is now a weak high. So that was my target, and that's it. You don't want to get greedy, right? I never really go greedy and target like something up here, like an origin up here, because as I tell you guys, the QM model doesn't necessarily always have to come back to the origin and come back to a flip, right? This is a flip right here. Come back to a flip and react, right? This is a flip because this flipped this demand here. This is responsible for breaking this previous demand right here, okay? It's not a very clean flip because it's not perfectly aligned, but I would consider that a flip for me. Again, these are just this is how I just name my zones. Feel free to name this whatever you want. You can name this like a decisional zone, just as long as you understand the reason for marking that zone. So what I mean by that is, essentially you want to make sure that this is a significant zone, and it is because it's caused a break structure here, right? An external break structure. So this is a reasonable zone for price to continue short. So I just targeted the weak high. And then same thing here. We tapped into this zone here. This flip right here. Let me flip real quick. And typically, this is also something based on experience. Typically, we create a changing character, a break structure, and then one more break structure before we continue the QM model. Typically, sometimes it's only one changing character and one break structure, and then we continue down. But usually it's one changing character and then two following two break structure, and then we continue down. This is something I noticed here. I'll tell you why I didn't mark this as a break structure. Technically, you could, but it's not. This is giving me a signal, and this is essentially what happened. So I was still anticipating in trying to follow basically the market, what the market is telling me. So it's following the trend here on our external substructure. So for example, you guys know, I'm trying to make this as simple as possible. To me, my brain works very well because I've seen this happen so many times. But I feel like some people that are still somewhat new, maybe not, I wouldn't say new to trading, but new to these concepts, might take a while to understand this. This is the external swing structure here. I'll make this internal as blue. Now this internal swing structure also has its own internal structure. These small pullbacks, these bearish bullish candles, these moves right here, you guys understand my point right here. This is all internal structure for this internal structure. So it does get confusing, but you have to just understand what structure you mainly are focusing on. And for me, I'm focused on mainly on this swing structure right here because this makes the most sense. I'm not focused too much on these little moves here. This is more so for if you want to take an entry, right? As confirmation. For example, if we broke this high, this is confirmation to go long, for example. But typically, I don't like focusing on the candle by candle structure because it's not significant really to me. It's just continuing the move that I'm expecting it to, essentially, with pullbacks. That's it. It's not really tradable unless you're on the seconds. If you're on the seconds time frame, then you could say technically these small candle movements and candle structure is actually your swing structure. So again, we're not trading on the seconds, and there's some downfalls of trading on the seconds if you're only trading on the seconds. Like if you're just always stuck on the 5 seconds because of how basically spread and commission works. You'll be paying a ton of commissions for trading because your lot size is, depending on how much you're risking, obviously is going to be massive. So it's not the best ideal situation, right? So anyway, here for this trade here, you guys know, I tell you guys, when price really wants to trend, sometimes it will trend very heavily and might not come back to origin. Origin, it missed down here. Instead, we came back to this flip right here, which is perfect. This is an A+ setup flip. Why? Because look at this. This flip perfectly aligns with previous supply. We cause an internal breaker structure here with this flip. Therefore, this is a very valid zone. And right here, I took an OB entry, targeted the week high for 4R. You can also use, this is when you can also use limit orders. Why? Because structure is already on your side. And this is a small range, right? This is not huge ranges with tons of structure. Okay, this is a QM model, internal continuation. You can easily use limit orders perfectly fine. But for this instance, I would still try to avoid limit orders for flips. Why? Because price could just disrespect this and come back to the origin to then push up, right? You don't know if it's in respect to flip or the origin. So in this case, something like this, where structures give me this type of context, I would prefer to take confirmation, which I did. OB, limit order, boom. Target the high. This is why I target the high. Exactly why. As soon as it hit my TP, price reversed. And the reason why I didn't mark this as a break structure is you guys notice how candles reacted here off this break structure versus this break structure previously, or this change of character. These had body closures that were very strong above. This one technically had a body closure, but look at how price reacted immediately after. That's extremely important. As you can see, that's why I marked this as a sweep. And what does that mean? You guys know when we mark something as a sweep, we are expecting the other side of the range to get taken out. And in this case, the other side is this low here, because this low created that high. So we're expecting this change of character to occur here, and that's exactly what happened. That's why I did not continue taking demand entries here. Prices tell me, based on how it's moving, how candles are closing, that is likely to continue the expansion move down now. And also as well, if you haven't noticed, when price does something like this, where like the low parts of the leg did not have OBs and only the high parts of the leg have OBs, like there's only one OB here really as a POI. There's nothing down here at the extreme. It's already mitigated. Typically, this then creates trendline liquidity here. Or this basically is trendline liquidity right here. Okay. Because block flow is holding. we had a continuation and price just wiped it out, right? So that's essentially what happened here. Originally, you could consider this potentially inducement, but since it missed the origin here, but keep in mind externally we are bearish. So respecting external structure, taking into account how price reacted here, it's a lot more likely for price to take out this low and continue lower instead of being inducement. So that's another key gem. Putting things into context and together and create stories, essentially. Trading is like a storyline. So here, I missed the original short entry here. This is a bit more of a risky short. And the reason why is just because you cannot 100%, the structure technically like has not broken this low yet. It has not confirmed. It is only confirmed above here that it is potentially a sweep, but it has not confirmed down here that it's a change in character. So I did not take this short here. You definitely could have though, but I did not. You can see we had an OB entry here perfectly. You could target, if you were targeting the expansion move, which I would have, it would have been that low for 16 RR, which is very nice. I typically don't, the only times you really like get 16 RR like this is if you're catching the high time frame expansion, which is what this is. Otherwise, if you're catching like the internal mitigation phase, typically you won't get as much RR because you're just targeting the next week high or low. So that's what happened here, changing character. Once that occurred, I was looking for basically ways to enter a short to continue this trend down, targeting this, because this low is now weak, or this low has been weak as external low, and that was my draw on liquidity. So what I do typically is I like to mark this ahead of time with my break structure telling me that I'm expecting price to come down there and what happened later. So here, this is outside of Asia session kill zone for me personally, but price was moving great, right? I tell you guys, market conditions over time. So time, the reason why I use specific times is because I know these specific times give the best opportunities in terms of market conditions. But that doesn't mean outside of those market conditions that you won't get a good trade, right? This was very good market conditions here, very high A+ setup for me. So put this in a data bank, and this is what I was seeing. Okay, we had a demand here. I drew out. You can just delete this honestly because it doesn't matter. All this to the left now, all these POIs to the left here, demand do not matter to me at all. They're all irrelevant because they are invalid. So do not take these. Okay, if structure is telling you and it's continuous high time frame trend again, do not take these on the left, please. You're just gonna end up in losses, even if you had confirmation, because you do notice we did have confirmations, right? Confirmation here, confirmations here, reactions here, but we still ran it. So that's why anticipation is key. Here what happened was we created a strong high. This to me here was a strong high. Why? Because we had liquidity taken previously. Okay, actually technically this isn't really a strong high because this liquidity that it took did not create a low. So it did not create a low here and then take it out. Instead, it was just an internal high that got swept and then taken out. So you can still mark this as a strong high. I just personally would not actually. So that's why I probably left it alone. But this is a lot lower probability of a strong high than if price did something like this and then took it and then made a new low, right? Because then this would be a fake change in character. And my high time frame draw was already lower, so I was not paying too much attention to that. I just knew this right here though is inducement, clearly, because we made an internal break structure, but we never came back to the origin here, right? So if you guys go, let's go replay mode. If we go in the 5-minute, you can see we had a 5-minute OB here. Okay, that's what I used. I think there was a 15-minute on here as well. Nope, no 15-minute. It was just a 5-minute OB right here that I used. And I set a limit order there. Why? Because everything was already lined up. Structure was already internally in our favor. Okay, we had inducement and we have a valid POI. We had a valid target. I don't need much confirmation for price to tell me to enter. You can definitely take confirmation, right? But to me at this point, there's already enough story behind it and confirmation that it's going to take out the low like 99% of the time. Very, very confident. Because I see this happen all the time. So I was very confident to set a limit order. Remember when I tell you guys for limit orders, always keep your stop loss conservative. Don't put it directly at this high here. It can still get swept by, remember what candle wicks do? Candle wicks do the damage. It could be just easily swept away by a little wick. So again, always put your limit orders, stop loss for limit orders. Give it breathing room basically above the swing points, the structural points, right? So let's say we had an OB here. I would still put my stop loss above the structural point, which is there. And if you had a confirmation entry, you might have gone and stopped out here. This all depends on your broker. This is the OA in the chart here. So it all depends on what your broker is, because I marked this as an internal sweep here because we technically actually took out that high again by a tiny candle wick. So that is honestly up to you. If you took a confirmation entry, you can make a rule saying you want to give it some more breathing room for situations like this that do occur sometimes. Not very often though. This is very rare, but I would say maybe 1 out of 20 times this occurs and you just take an unfortunate loss. Or you could just sacrifice your risk reward just by a tiny bit to not have this happen to you, right? So we had that trade right there. 6R targeting the week low, like I said. And now if we play price out, came into London session, kill zone for me. Okay. Remember, all indicators are 50% off for everyone that bought the course. So if you're watching this, they're all 50% off. Just let me know. And you guys can see, this is another thing I want to talk about. I don't remember if I talked about this before or not. But when we have a very strong break structure, either it's external or internal like this or external like this. When we have something very strong like this, price is very unlikely to come back to the origin. The origin is already up here, right? This is the high that broke the low. Very unlikely for price to come back down there. Why? Because price is just so far away. So I would not be marking my 50% tool like this necessarily when there's a huge break like this. What I mean by a huge break is look at how far away price displaces in terms of distance from this low. It wasn't a small break where we had body closures here, body closure maybe down here, and then we came all the way back up, reversed again. Instead, this situation, we completely broke out of the range by a lot. So this would be what people would say consider as a valid breakout here to the downside. And typically what happens is the flips become very, very strong POIs when this occurs. So this here is a perfect flip. Previous demand turned into supply here, right? This flip caused this external. This was the last POI that caused this external break structure. Very strong flip here. Very high quality setup here, okay? I wouldn't be marking this. Technically, this is high time frame inducement here on the higher time frame for this origin. But like I said, because of how much displacement price broke this low, we're anticipating majority of times, 9 out of 10 times, price will respect the flip instead. So what happens now? You respect the flip. I got an OB entry. There's another OB up here. You would have got a 6R. I just took a 3R entry because I don't want to miss this move, right? 3R, 3.65. I just round down because in case of like, for example, I would recommend you guys doing this too, to round down your numbers if you're journaling, because let's say you're not including spread if you're trading Forex. There's not really spread on futures or commissions, which both the Forex and futures you pay for. So I just round down typically, unless it's like 3.9, then maybe I round up, but typically round down. That just is a thing for me in terms of data. I like to keep my data more conservative, pretending I'm doing worse than what I actually am. Like, for example, let's say I actually had 140R on TradingView for the month. I would, in my journal, most likely it would add up to like 120 maybe, because I like to keep things more conservative to keep myself breathing room for things like commissions. That's just based on that's just for my personal calculations. You guys do whatever you want. This is not that important. Anyway, 3.65 here, and I targeted the week low. Right? 3.65R. Right here is so unfortunate. We tapped into origin on the 1 minute. Great trade. We created an OB. That's when I took the entry, and I got wicked out. Didn't see how they got wicked out right here. Very unfortunate this occurred. Nothing you can really do here unless, again, like I said, if you have a rule that you have bigger stop losses. But Yeah, that basically happened to me. Took a 1 hour loss here. I did not re-enter here. I probably should have, but typically for my rules is I take one confirmed entry per POI. So this one POI here, okay, it's already refined to the 1 minute, right? I only take one confirmation entry. So whether that's one limit order or one confirmation entry, if I take a stop loss there, I'm done for that POI and I look for something else. Maybe on the origin of up here, maybe this could all be inducement for that origin. But typically that's my personal rule. You can have different rules for your trading. But if you took a re-entry, you would have, let's see what happened here. Ooh, you would have might have gone stopped out again here if you had a limit order there. And then the third time's the charm. OB, boom. And you would have easily covered your losses. Easily. 10R right here, targeting the weak low. That's where I was originally targeting. And boom. Right. You guys can see price always, not always, but majority of times price will still give some sort of reaction off of POIs. That's why I tell you guys, like, limit orders in the impulse model, candle break, is the lowest probability entry model that I prefer because there's not enough confirmation. The only times I'll really use that, like I said, is if internal structure is trending very heavily and structure is already on your side. In this case, structure is not on your side. We are externally bearish and internally creating bearish order flow going down, okay? So, and these highs were respected. So you would not be, this is not an ideal POI to take an impulse or limit order off of, right? The only good thing about limit order, like I tell you guys, is the limit order strategy is you can move your stop loss once price gives reaction. You can move your stop loss to break even or below the most recent candle low ahead of time. So you can really preserve your P&L that way. But aside from that, you would have taken loss here. If you tried longing against a trend, never do that. And yeah, that's essentially the trade recaps. This is a very long video. I try to make them as short as possible, but I feel like if I talk too fast, then people won't catch up. So I try making them as informative as possible. I feel like these will definitely help a lot of people that are still new to these concepts to fully see them play out on the chart, like actually live, not just like drawings, right? Not just like me drawing higher highs, higher lows. This is this is like the reality of trading, of how you should be attacking every single day with trading, how you should be managing your risk and managing your trades, okay? And again, these losses don't mean much to me. We have 2 1-hour losses, okay? This is 3, 6, 9, 9, 11, 15, 14, 13, okay? This is a 13-hour session in about 7 hours, okay? I'm not actively staring at my chart for 7 hours as well, okay? You can typically go, once you find your structure points, you find your weak highs, strong highs, you have your idea, you can set alerts, which is typically what I do. I set alerts at my POIs, and once it gets hit, then I look for my confirmation to enter my trade. And the thing is, sometimes, let's say your alert never triggers, you still want to come back to your chart once in a while to look at it, because price could be creating some other new structure here, right, on the right side, which you could be taking advantage of, right? Let's say it's creating bullish order flow again, and you could be taking advantage of these new POIs, but you just didn't see them because you had an alert at your old POI, which is invalidated because of how price is creating your structure. So that's definitely something you want to take into consideration. You should check back on your chart once in a while, but I would recommend screen time is very important. I would say to try your best to just watch price and how it's reacting and all that. Of course, not trying to trick yourself to take trades all the time, but having that screen time in the beginning of your journey is definitely crucial, in my opinion. So hopefully you guys did enjoy this, and yeah, I'll be uploading this real quick.